Good morning, everybody. It's Thursday, November 29th. We're getting to the end of November already. Amazing how quick the year has gone by. 2012 has been a very quick year. A couple developments today. Obviously, the market direction model went to a neutral signal. And yes, you guys don't have to give Dr. K a bad time. I've been giving him a bad time about it being kind of late here. But, it is what it is. And we already know that we're subject to a lot of whipsawing already, given the state of this QE eternity sort of market. But I want to point out a couple things that we were talking about 2 weeks ago, 2 Fridays ago, and that is number one on the NASDAQ chart, which you see here, which I'm going to make nice and big. We did undercut these lows. Remember, we've been talking about this, and we did undercut the lows of July here, and so we undercut, and you could tell back then we got Apple went below that 522.18 low in its base. And you saw Google hit its 200-day moving average. You saw Amazon hit its 200-day moving average. So essentially, there are a lot of signs that the market was at least completing a first leg down at best, maybe even at worst. But that's pretty typical. You're going to come down. You got a little bit parabolic. So you knew at that point that you were likely to bounce. And so if you're operating with, say, some inverse ETFs, you could have backed away and taken some profits there. In anticipation of the rally, because sort of there, even though the market direction model doesn't pick it up, you can kind of intuitively see what's going on in terms of the leading stocks that have come down, like the Apples and the Googles that have broken down, and the position of the indexes. So it all makes perfect sense that you're going to get this rally. Now we know that oversold bounces can go a lot further than anybody thinks. And I think that that's probably the case here. Now, maybe with the market direction model going to a neutral, this could be the top, and it kind of looks a little bit, you get a gap up today, and you can see, I'm going to try and make this a little bigger for you guys to see. Let's make it fatter. But you get this, this gap up sort of move. It almost looks like an abandoned baby and coming up to potential resistance and the 50-day on the NASDAQ, okay? So it's possible this is where it could give way, and suddenly everybody's bullish and everything is wonderful again. So to us, we still sort of see this as an oversold bounce, and not that it isn't playable in some names if you're trying to play an oversold bounce. But if we look at the S&P 500, it's also pushing up towards its 50-day. You can see here the blue line, the 50-day moving average, and that's kind of the position you're at, and you're straight up off the bottom. So we'll see how this pans out. It may turn out that you really get nothing going here, and the whole thing just kind of rolls over again, but we'll see. But in my view, you have one leg down, you undercut the lows on the NASDAQ, and now you get an oversold bounce. Chris, you want to talk about the market direction model?
Yeah, sure. Well, as everyone knows, it's designed to catch the major trends. What we're seeing here is a tight V formation. There's no major trend in this. However, the model's gone to a cash signal because, first of all, there are some names like REGN and CBLT that are leadership names that are performing well. The indexes are looking like they could go further. We don't really know how far up these oversold bounces will go. On the other hand, the market could very well roll over. That's all to say that you flip a coin whether the market's going to go higher or roll over from here. When you flip a coin, you might as well be in cash. So the model is in cash at the moment. That doesn't mean it couldn't switch tomorrow, but it all depends on what signals it gets. Now, as far as the profits that the model had on that downtrend, we do have some members who use their own position sizing techniques. They pyramid in or pyramid out, and so that allows them to take some profits, especially, as I've said before, in a year like 2011 and 2012, which are fairly trendless and volatile. Sometimes you do want to take some profits off the table because neither of these years have really had sustained trends in either direction. The longest one was really not very playable, as witnessed by the trend-following wizards, who were all collectively down after the first quarter of this year, which I've never seen before. I've never seen an uptrending market, and then the guys, all these top-end guys who've been around for 25 years are collectively down, some down double digits by the end of March of 2012. At any rate, what remains to be seen is whether the market's going to go higher or roll over here, and the market direction model is poised to issue a buy or sell signal on that basis. So it'll continue to monitor the price volume action.
Yeah, so we'll see what happens with that. And it's possible you could get a really nice signal here and another break to the downside, or it could take more time for everything to roll over. And I know, with the news out that the fiscal cliff there's going to be some solution. I still think the bottom line is that the economy is still quite slow here, and I think the potential for more downside definitely exists. So really, what's going to happen here is everybody's going to get complacent, and that may set up a rollover here. In fact, you've seen the market start to roll over here. Dow's up only 22, so actually at the lows of the day. I also think, and I'm not trying to put this in a political light or anything, but I do think we have people in government today who want to increase the power of government. And that's not to say that it's necessarily the domain of Democrats. I think Republicans have done the same thing, and I think any crisis is used as an excuse to increase government control, to pass more laws, pass more regulations. And they always, and historically, governments have always used crises as a reason to expand their power. And it kind of struck me, and this is something we were tossing around, and I'm not throwing this as anything political at all, because like I said, I believe that the Republicans and the Democrats have both basically gotten us to the situation that we're in terms of the gargantuan debt. And of course, the government doesn't pay attention to the off-balance sheet, or at least the liabilities that they keep off the balance sheet, which are increasing by about $7 trillion a day right now. It's something I read recently with respect to Medicare and Social Security, with all the baby boomers starting to hit the beach, so to speak, on the invasion into these entitlement programs. And I was born in 1959, and that's actually, according to numbers I've seen, the largest cohort group of any of people born in any single year in the history of the country. So here we are. I'm 53. I'm approaching my 60s, but you're starting to see the majority of these baby boomers supposedly hitting the beach and coming in here and starting to lay claim to some of these entitlements. Now, if that starts happening, where do we come up with the money? I don't see how that happens. So I have to think, and this is leading into the first question we have here, that the silver and gold are eventually going to see some big upside moves. And I think that the government has no choice but to continue this borrow and spend sort of thing that they continue to do, and really have just been kicking the can down the road. There aren't not going to be any real cuts anywhere, as far as I'm concerned, and I think that you will see silver and gold eventually rally higher. Now, the problem with that is if we get another leg down in the market, that they're going to get dragged down as well. So I think it would serve us well to keep an eye on these. But the action yesterday in silver was interesting. There was a gap down in the metals yesterday on the opening, and that started about an hour before stocks started to trade. So it was around 5. I saw it around 5:20 a.m. my time here on the West Coast. And the interesting thing is that, give me 1 second here. Is that there is supposedly a rollover contract, a gold futures contract rollover, rather, that was turned into an outright sell, and so they just started hammering the metals. That created sort of a short-term buy opportunity in the metals, but I think, what you're looking at here is that the metals are still, if we look at let me pull up a weekly chart here, the SLB, they're just in these big consolidations, so they haven't really started a real move yet, but they are in position to, and so I would keep an eye on this. And of course, we're watching for some sort of buy signal to show up in one or the other. I don't know, Dr. K, you wouldn't call yesterday a pocket pivot, would you?
No, I wouldn't extrapolate that.
Okay, even though you pulled down to the 50-day and you bounce off of it on pretty decent volume, you don't look at it that way.
That's really cheating it. I wouldn't do that. I just stick with what's worked, rather as opposed to trying to fudge and force it. However, that said, this is the formation's shaping up in SLV and GLD. So my guess is that we will get a legitimate pocket pivot. Maybe we'll get it a little higher, but I believe we'd probably get it before it crosses 34.
Right. So, but the bottom line is you're just in this long consolidation. So they haven't really given up on the long-term trend. Here's the GLD, and it's the same thing. So to me, it seems like they're setting up in here, and I think it's just going to be a matter of where things go in terms of how the debt crisis is settled, which I don't think it is going to be. I think they're going to be raising the debt ceiling, how this fiscal cliff goes. in terms of whether you're going to see stocks get dragged down, because I think if stocks do get dragged down, you're starting to see on the S&P, you see a nice reversal now at the lows of the day on the S&P, still slightly up. Now it's turned red. But I think if you do have stocks head down another leg down, it's going to drag the precious metals with them. So you have to be somewhat cautious. I did use yesterday's pullback to come in and buy some of the SLV, and I sold it out this morning when it was up around 33.18, I think it was, just because I felt that you had gotten just pushing up into highs here. Let me go to the daily chart here on the SLV. Where did you go? It's hard to keep track of all these charts here on this screen. But, you know, you're pushing up and breaking out here, and that sort of seems like a fake out. Maybe you have some resistance up here. But the other thing that's telling you that you might have an issue with the metals is the fact that gold really isn't coming back and taking over or taking back the 50-day moving average. It still remains below. So I think a lot of this is still in play. So you have to be vigilant and you have to be somewhat nimble if you're going to try and trade these things. And I thought yesterday, you know, it gave you an opportunity to trade them on that rumor of a contract rollover that turned into an outright sell. So that's kind of where we are with the market and with the metals right now. So I'll go through some questions in terms of individual stocks. Chris, people are asking about an update on the TVIX system.
Yeah, the UVXY. Sure, UVXY lays dormant in cash at the moment. It doesn't sense an edge in either direction, and you know, it's going to pick its spots. But that said, it is a shorter-term model, and therefore I expect it to issue signals more frequently than MDM. And you know, again, I wouldn't be surprised if it issues a signal tomorrow. But it all depends on the market environment. But it's more than happy to wait, and especially, you know, this is a very choppy environment we're in, which is, you know, the bounce is going longer than we had thought. You know, a lot of the market's going to do what it's going to do, and so the UVXY model is sensing that and staying in cash for the time being.
Yeah, you can see we're pretty choppy today. Was there some news just came out? I didn't see anything. I don't really watch the news, you guys, just so you know. I had a Bloomberg for a while, and I got rid of that, even though I think it's a great system and there's a lot of data and information. Particularly, I like the institutional sponsorship numbers that were shown on it because they're more updated. But I didn't notice that it was giving me any kind of edge. It tends to be an overload in terms of just news coming at you. And I think with all the noise going on, I just prefer to watch the indexes and to watch the short-term intraday charts to figure out what's going on, because it has been very choppy. But we may be getting to a point here where you want to look at going short again, so I'm waiting to see how that pans out. Let's go through some of the names.
No substantive progress in fiscal cliff negotiations. This just came through the wire. That's probably why the market's selling off as it is. He says that the White House has to get serious about spending cuts and talks to avoid the fiscal cliff.
And I think, you know, I think the White House, and I was getting to this earlier, I kind of got off track a little bit because I had a two-pronged point to make, the first one being the metals. But the second one is, you remember what Rahm Emanuel said a while ago, and that is that you don't want to let a good crisis go to waste. And then he explained that comment by saying what it does is it gives you the possibility to do more of what you wanted to do. So I think that we have a government that wants to create a European-style social welfare system where the government's in control. So why not use a crisis of your own making, so to speak, whereby you can create a crisis with letting us go over the fiscal cliff, which creates an economic and a market crash, and then gives you the ability to push more of your agenda through.
That's what the U.S. government is known for doing. I mean, a lot of, you know, ever since the RICO laws, I mean, this has been going on for decades. You not necessarily manufacture a crisis, but you utilize a crisis to your benefit to pass laws, often egregious laws, that will get passed into legislation, and then they stay. As we all know, it's much easier to pass a law than to repeal a law. So consequently, over the years, you know, the government has become more, you know, bigger and more powerful, and free enterprise has become more and more hamstrung.
Yeah, and I think that's, you know, that's where we're headed. And it has been Republicans and Democrats. And as I tell everyone repeatedly, I'm a libertarian. Says Dr. K. We're both libertarians, and we come down on the side of individual freedom. And you know, basically being an aging hippie myself. I mean, I'm like a second wave hippie from the 70s when all of us were imitating what we saw the generation just ahead of us doing. Whatever happened to power of the people, and the man, we always talked derisively about the man, and that's the government, and yet people seem to have placed so much faith in the government these days and the people running it, almost to the point where nobody wants to give up the teat of the government welfare system. So, like that may be a possibility here, and it wouldn't surprise me to see that happen. But like I said, keep your eye on the market, and the bottom line is you have an oversold bounce, and it's occurring from a logical position. We saw that 2 Fridays ago, and we're watching for it to give way. So the market direction model goes to neutral, but that's just where it is right now. We can change tomorrow, as Dr. K said. So let's go through some names here. Everybody's asking about names. SRPT. What is that one? That's just a cheap little. Let's see. Yeah, no, not a cheap stock. What am I saying? I don't know. It's kind of thin, yeah. Well, it trades like about 2.7 million shares a day, so it's not really a light trader. But it's, I don't know what to say about that.
There was a 27.9 million share day, so it's kind of distorting the average. And I would say this.
That's what it is. You're right.
Yeah,
so
it's on the thin side. More risk.
Is this a pocket pivot right here? Yesterday?
Let me see. Yeah, it would. That looks like a pocket pivot, but. Yeah. It's a cautionary one because, I mean, there's nothing wrong with putting a small percentage of your portfolio, a less than normal position size in a name like this. It could go, and if it goes, it's probably going to have a lot of time value. It's made a big move already, but, keep in mind this is going to be quite volatile from here on.
Yeah, I'm going to pull up my Wanda here. You saw that come up, but I don't show it on the screen.
The other thing is a lot of these biotechs, when they make these huge moves, and you look at the weekly, and it's done just that, and everyone sees it. And you got to be careful because the odds of this keep going further from here are low. I've just seen these kinds of biotech patterns, and then they don't go anywhere after this point. They kind of set up. Well, yeah. In fact, if it doesn't go volatile, it could just flatline, and your money's just tied up in something that then bases out for a long time.
Yeah. That said, if you really understand the story and you have faith in it. The pocket pivot, I guess you could buy on that basis and use a stop using the 10-day moving average, say, as your selling guide. I don't think I'd use the 50-day because that's 20% lower. But the 10-day is running through 28.30, so that's a possibility if you really wanted to get involved in that. So, that's how you would handle it. But it's not something that we would be raging bulls on. And we're somewhat cautionary. I mean, I tend to look at the market more as a tradable phenomenon on a stock-by-stock basis, given the move up off the lows. You can see some stocks. Commvault, this is another one I sold it this morning when it was up, and it was jacking pretty nicely. But you had a little bit of a weird pocket pivot here coming from a strange position. But then you had another one here on Monday. We talked about that. And then you break out to new highs here on another pocket pivot volume signature, but you're extended from the 10-day. So obviously you don't want to be buying that. But it could come back into the 10-day. This stock has acted pretty well. It's got good numbers. I like the theme. So that's a possibility as a potential leader if, and that's a big if, we start a new bull phase, which given the fact that we're over 40, we're in the 45th month of a bull market that started in March, April of 2009. And somebody's asking about the O'Neill camp says that, we're 3.5 months, or 3.5 years rather, into a bull market, and so the probability of further downside is greater. And I guess I would agree with that. I'll let the market tell me what to do, but I think that is another consideration, is that if we're starting a new bull market with huge uptrends in leading stocks, I think that you're then assuming that we're early in the cycle, and I would say based on the fact that we have been 45 months or so into a bull market already, you're late in the cycle. So the probability of this failing seems pretty high, and that's something I'm just keeping an eye on. In the meantime, I just approach this on a stock-by-stock basis. So another stock we've been looking at, Rax, had a pocket pivot sort of move, breakout yesterday. It's kind of a short little double bottom. I don't know if it's long enough to really work, but you do get the breakout, and it's holding up, but it does get resistance up here at the peak on the left side. But that was a decent move yesterday. So Bonner, there's some people IMing us with the news. Thanks for that, you guys. Somebody's saying real danger of going over the fiscal cliff. Somebody says, could you reference the source of the off-balance sheet article you cited? No, I just know this from all the things that I've read. And anybody knows this, when the government talks about the deficit being 1.5 trillion, that's on a cash basis. So it's basically, you know, garbage in, garbage out, or what comes in and what goes out on a cash basis. If you run a business, and Dr. K and I have to do this because we have to maintain certain balances for the SEC in terms of what we keep in our accounts. And for example, let me just say, like, if we have subscribers to the website, if someone gets a one-year subscription or a quarterly subscription, we cannot recognize those revenues until the quarter is done, and we can do it on a monthly basis, recognizing 1/3 of them on a monthly basis, or say the fees that we bring in from our managed accounts program, those are taken quarterly, but we cannot recognize those as revenue until you actually get out through the quarter. So as we go through, for example, let's say we have somebody subscribes in December, on December 1st this year. After December, we can recognize 1/3 of that as revenue, and then after January, we can recognize the other third of that as revenue, and then finally in February, the final third of that as revenue, for the purposes of showing the SEC what our account balances are. Okay, so as a business, we're required to show everything on an accrual basis, not on a cash basis. And any company, the CEO, the CFO would be thrown in jail if they tried to show their balance sheet and income statement the way the government does. So it's all deceptive. So the government doesn't show you what the unfunded liabilities are that are liabilities. This is money that the government's got to come up with at some point in time, and you know the numbers are anywhere from 80 billion roughly to over 80 trillion rather to over 100 trillion. That's huge, and I don't see how we get away from that. Therefore, you know, that's how we build the case for continued devaluation. I'm trying to remember the senator who said, I was reading this, and I'm trying to remember the source, but there's a senator who said, I have 700,000 constituents in my district that are on Social Security, and that's 95% of the voters in my district. Therefore, I can't go out there and tell them that I'm going to cut their benefits. It's not going to happen. And he admits that, so what happens is we end up giving people their benefits, and we just kind of go along with the whole thing without touching the so-called third rail of politics, which is Social Security and Medicare. And then we pay them their benefits, but we're going to pay them with money that we printed, which, you know, they'll get their benefits, but they may not be worth much because the currency will be deflated so badly or devalued so badly. And I think that's really the mentality of politicians. They're not going to do anything to jeopardize their reelection, and they'll be happy to just print money and devalue the currency, as politicians have throughout the ages, rather than owning up to the reality. So, you know, when I talk about off-balance sheet items, those are Medicare and Social Security, which the government does not account for when they are accounting for the deficit that they report every year. And I know that, you know, last year we had a $1.3 trillion deficit, Dr. K? And
Yes.
yeah, and that was on a cash basis. But if you look at the actual, you know, accrual on an accrual basis, the deficit is more like $4.5 trillion, and that's building every year. And so, you know, that's somewhere pushed is going to come to shove. And my guess is they just print money, so that makes the case for gold and silver. I do think that a devalued currency is bad for the economy, and it's bad for stocks. So, moving along. So that's the reference of my source. Jim, but there are a lot of places out there. Just go on the internet and you can check it out. And there's a lot of different, you know, different numbers thrown about. You know what they say: figures never lie, but liars always figure. So, someone asking about Ocwen Financial. It looks like it's trying to issue some kind of a move here. That's not a pocket pivot yesterday, so it's really just in the base. There's no buy point there. Okay, everybody's telling us Bonner press conference. I knew it had to be something. See, you don't even have to watch the news. You just watch what the market's doing, and you know what's going on. Let's see, just running through more of these IMs. Everybody's IMing us about Bonner talking. How would you decide when to go short Apple? That's a good question. You know, I don't know if this could be the spot to go short Apple. It could rally to the 200-day moving average, could rally further. You're just kind of watching. I think what you would do then, I think, is probe it and look for it to roll over. You are getting into, you know, deeper up into this base or higher up into this base and more into this area of congestion here. So, I've looked at this as having the potential to get as high as a 200-day. It could stop here, where it is right here, or it could go further up to the 50-day moving average. And I've even traded it on the long side and made some money doing that, just on the basis of the reaction rally. But I'm trading it very quickly, and I'm really looking as nothing more or less than a short-term trade. But you would just be probing it, and eventually, when it starts to give you some love, you can take your probe a little deeper, and hope that doesn't get anybody titillated out there. But you can take your probe position a little deeper and build it up and get heavier on the short side. But a lot of times these things take some time and they wiggle around, so you might be messing with it for a while. So I just be cognizant of that. Dr. K, here's one for you, Chris. Dr. K, if you had not been giving a free Vegas seminar 2 weeks ago, would the UVX model had changed? Did being away from the screens interrupt your rhythm with this very sensitive model? I can just tell you from my experience, it threw off my rhythm with the whole market. So I ended up covering the Apple short in an inopportune spot, and that's one reason why we're not doing those anymore. It just costs us way too much money. Chris, what's your comment on that?
No, the UVXY wasn't going to be switching signals even if I were at the helm. It is not an intraday model. It is more designed to catch longer-term trends on when it's on a sell signal. That is because the market tends to uptrend in a more gentle fashion. It tends to take the escalator up, but it tends to take the elevator down. So on a buy signal by the UVXY model, that signal is probably going to be pretty short-lived and designed to capture quick downside market action, which means quick upside UVXY action. But no. That said, there was I do work with this intraday version, which is you have to be right there, right split second, otherwise you could get some slippage. And I did miss a signal on that, but and that's frustrating for us because obviously we're traders first and foremost, and so we don't like to miss an opportunity, whether it's a trend following opportunity or an intraday opportunity if it presents itself.
Somebody's pointing out on, I'm just going to get rid of these index charts. On the SRPT, if you're looking at the weekly chart, it's basically a V shape. Yeah, it's wide and loose. I mean, that's a pretty wide and loose pattern. So there's no real areas of tightness in there. So there is that risk. So, but again, like I was saying, if you want to try and buy that pocket pivot yesterday, you can go ahead and try and do that. Let's see. Let's get rid of this one too. Here we go. Now we're going to do this and set these up. So I can see them both. We'll see how this ends up working. A little bit too deep, perhaps. There we go. That's nice. Okay. And you could go ahead and try and buy this pocket pivot. So we'll show a weekly on the right and a daily on the left side here. HMSY short. Is that a bank? That's a bank, isn't it, Dr. K?
HMSY. I remember this one.
MS Holdings.
I
don't know.
They're more healthcare oriented.
Okay, so is it a short? Yeah, I don't know. You've had 2 gap downs already. It looks a little bit exhausted on the downside, but I'm not going to short it here. I don't have any real reference points. And it's come down a fair bit already. I'd be looking more at, Apple and some of these other things that we've been watching. I'll get to some of those in just a bit. NTE Namtai. This is an old name. I remember this one in I don't know why it makes me think of that song that's been going around, that Gangnam Style. So Gangnam Thai style, I guess. But yeah, I mean, it's a thin little stock, tiny stock, a Taiwanese electronics manufacturer, and kind of erratic. Here you have a pocket pivot here. It's coming in, so it's kind of up there. You like this one, Chris?
NTE. Well, it's a bit on the thin side. It's only 678 mil market cap, and in this environment we've been in the last, really since 2009, it hasn't really favored small caps very well. So I think there's just too much risk in getting involved in this kind of thing. But again, you can do a small position on the idea that it might might give you a quick 20 or 30% profit. And the earnings and the sales look great. They're serious acceleration in the last quarter.
Yeah.
So if I were to invest in something like this, it would be no more than a half position.
Yeah, and then the other thing is, are you really starting a big bold new bull market, and are you going to make a lot of money going along these things? I tend to think not. So, I'm skeptical. The long side is not much more than really a short-term trade. I'm trying to move with the way the market's been acting. So TSM, someone is asking about. It's another semiconductor. It's gapping away here, and it's a real thin stock. It trades about 10.8 million, but still, what is that? About 20 million in average dollar volume, so kind of thin.
That's about 200 million average. It's liquid.
200 million. Wait a minute. Yeah, you're right. What am I thinking?
It's just you have a pocket pivot on. No, it didn't. Never mind. It has not had a pocket pivot. But
it's a lot like NTE. They're very similar. So TSM and NTE. But I don't see any buy points in here. You had a gap up, in here the other day, last week, I guess. And there's no real volume there, so that's a little bit suspect. And you come straight up off the bottom on the weekly chart, you can see that. So I'd be a little bit wary of that on that basis. Let me see if I can stretch these charts out a little more. Let's go through some more. HDB, what is HDB? HDSC Bank. I notice some of these foreign banks have been doing well. There's another one, BSMX, that's kind of setting up. This is a weekly chart. It looks pretty sloppy, but here you can see it's just a little flag. But HDB, that doesn't really get me excited. I'm wary of financials, but the stock's way extended here. I think if you were going to buy it, you would have had to buy it in here somewhere, but the only thing you have is this breakout right here, which is 6 days ago, and that wasn't a pocket pivot. It was exceeded, the downside volume was exceeded here. So, I don't know, that's neither, kind of like, it doesn't get me excited. I'm looking for something. When I'm looking for leaders, I'm looking for basically the next Apple. I'm looking for things with huge earnings growth. HDB earnings up 19%. Quarter before that, they're up 29%. That's not really in the realm of the fundamentals that we're really looking for. And I think that it's just a chart breaking out, and some of the financials have been moving higher, some have not. So it's kind of neither here nor there for me. CRM, is that toppy? I don't really know if it's toppy or not, because you had this big pocket pivot type move. Now it's coming up off the bottom, so it's going sideways here. I couldn't tell you if this is necessarily in a shortable position, because if you look at the weekly, show me where is the pattern there. What is that pattern? That's basically, it's trying to break out from a cup with handle. Now, if that's a flawed cup with handle, then it's going to break down through the 10-week moving average, the blue line. And that would be where you would want to come after it. So I think you just have to wait and see what happens here. But I wouldn't assume that it's toppy. I'm trying to come after stocks that are rallying within weak patterns. And so on that basis, I think you can come after certain stocks like Apple on this rally. And it's really going to depend on what the market does here in terms of whether those work. But I think this one, I wouldn't try to predict whether it's toppy. It's acting pretty strong. Actually, it has. So it would need to show me some weakness first. I hope that helps. Is LQDT shortable here? No, I'm not going to short this because it may be shortable. It's got the pattern, but I wouldn't short it because it's too thin. And it's a funky little stock. I mean, it can get running very quickly. And so I'm not really willing to short that one. Now, Mellanox, I thought was a short up in here. And I was reading in IBD something about how Mellanox is carving out a new base. This is the weekly chart. I don't know what they see here, but I don't see it. I see sort of a head and shoulders sort of formation here. I don't know if I'm going to call this a little shoulder here and then a head and this breakdown here. So to me, it was shortable when it was up at the 10-week moving average. The only problem is I could not borrow any stock to short. So I think this one's heading lower, but it's at the 200-day, so you'd have to watch for a bounce. I wouldn't short it here. It's already had its downside move. So anyway, somebody's calling me. You'll just have to bear with me. Probably some cold caller.
Call from 29 Front.
The average person doesn't understand the concept of inflation. So here, I gotta shut that off. So I don't know. Do all you guys understand the concept of inflation? Do you understand the concept of inflation, Dr. K?
It can get tricky, but yeah, there's a general sense of what it represents versus deflation and depression.
Price increases. So I know that deflation is constantly used as an excuse as to why the Fed needs to pump up money into the system. And I think that's kind of a pathetic excuse because I don't see what's wrong with falling prices. I think that helps people out. I think they just want to continue to do their thing. So SHW, Sherwin-Williams, I'm not a buyer of this. So how about you, Dr. K? Are you a buyer?
I was just going to say that deflation takes power away from them, and inflation, and that all governments have inflated currencies away since the beginning of time, since currencies were invented.
Right.
And it allows the government to give themselves a little bit more breathing room, a little bit more time opportunity for re-election, and to make things look better than they actually are. But meanwhile, these currencies do erode over time, and all currencies have eroded. If you took a penny at the time of Christ, so we're talking 2012 years ago, and you compounded it at a nominal 7%, I think it's 7 or 8% annually, that penny is going to turn into about $342 trillion. It just illustrates the fact that no currency remains. All currencies fall.
I should also point out that the dollar has lost 95% of its value since 1913, which was the year that the Fed was founded. Trimble is not a stock that I'm really looking at here. It doesn't. I think it's a stretch. I don't know. It's not that exciting to me. It's trying to break out, but it's coming off the bottom here and just wedging up. So I don't really see anything there. It's kind of a pocket pivot here, I guess, if you wanted to buy it. But maybe getting some push from the Christmas buying season, I guess. But I don't see anything here. Do you, Dr. K?
No, it's not really.
I wouldn't short it. I mean, someone's asking about shorting it. Yeah, I wouldn't be shorting it.
I wouldn't short it, definitely not, because it's hitting new highs. It could certainly go higher, but it's it had the pocket pivot. This stock doesn't really get me interested.
Yeah, I wouldn't short it, though. I know you're asking on the short side, not the long side, but I wouldn't short either. Remember, the stocks have to be breaking down. You need to see some sort of a pattern, a head and shoulders, or a failed base. So, Illumina, ILMN, not a stock I'm buying. I don't really like this pattern at all. And I heard that there's going to be a tax on the revenues of medical device companies. I don't know if these guys are medical device companies. You can see it's stopped trying to break out today, and it's just kind of reversing. So, and I don't really see what the attraction is otherwise. I mean, earnings were up 86% in the most recent quarter, but that looks more like a comparison to a weak number. So, hard to say. It's not really anything I'd be looking at on the long side. BRX, Valiant Pharmaceuticals, that's another one I'm not really interested in. Here's the daily chart. It's just running along the base. That's not, you could say that's a pocket pivot, but it's occurring under the 50-day moving average. Any comments here, Chris?
BRX. There's not something I would ever. I'm not excited about it. I mean, if it wants to redeem itself, it will do so in the days ahead and offer another buy point. But overall, I'm not. The fundamentals are very good on this, and it did have a gap up. But I don't want to be buying this kind of pattern in this kind of market environment. So it needs to really come up back, up into the higher 50s, and then issue a good pocket pivot, and then I might take a position.
Yeah. So running down the list here, LinkedIn short. I was actually looking at this one this morning when it was up, and I couldn't borrow any shares. And what I've noticed, when these things are rallying, you can borrow all the shares you want. And then once I get to a peak here, all of a sudden I can't borrow them. I can borrow it through J.P. Morgan, but I can't borrow it through Schwab, and so I'm not sure what's up with that. But I would say that the bottom line is this could become shortable here. It's rallied back up to the 200-day moving average. We look at the weekly, which is kind of funky looking, but let's get this you got this breakout from a faulty cup with handle, it fails. You rally back into the 50-day, the 10-week line here, and you're doing it again. So, you're in a position potentially to short it. And if you did, you can see that the 50-day moving average is different than the 10-week. The 10-week comes in at 108.10, which is right what it ran into this morning. And the 50-day is 110.35. So you're talking about 2-3%. I mean, now you're talking more like, a little over 3%. It's at 106.99. But yeah, I'm looking at that as potentially a short. I thought it was this morning, but I couldn't borrow any stock, so we did get that one off. So we'll just have to see how this all pans out, I guess. But yeah, I think that's a possibility, and use the high of today, for example, on the weekly chart as your quick stop, or use the 50-day at 110.35. So I think that has potential. I wish I could have borrowed it this morning. Bought Cree down 60. Oh, here's an interesting one. Somebody bought Cree, so let's pull up Cree, and they're down 6%. I don't know, I wouldn't have bought it this morning because you're extended from, this is too short of a base, and I don't even know if it's a flag formation. Let's take a look at this. Here's the other thing that's flawed with buying this stock, is you're in this base, but it's a low pattern. It's not a stock that's been in an uptrend. It's really been in a downtrend, and it's in this low pattern. So, if I bought the stock this morning, I'm down 6%, I would just be gone. I wouldn't mess with it, because the next thing you'll know, you'll be down 10%. It's down because of a downgrade, but I don't think it was in the proper position to buy in the first place. So I think that was the mistake. So, just own up to your mistake quickly and get the heck out of Dodge. Any comments there, Dr. K?
Yeah, absolutely. I mean, you got to be nimble, and especially in these choppy years, where in the last 2 years have been really unprecedented in terms of the degree of chop and slop, I call it. So, when you see a stock reverse on you, you got either have if you can't be at your screens, have some sort of sell stop put in, or you can do that often through your phone. These days, all the smartphones, you can have it at the ready. So even if you're not at your screen, you can still be watching your stock.
Yeah, but beyond that, I would say that the stock selection on this was bad to begin with, because you got a company growing earnings at 8%. The quarter before that was negative 11. The quarter before that was negative 26. So you got a company that's not showing the earnings growth that you want to see. It's also not in the proper position within its pattern.
Yeah, it's a bottom feeder.
My advice would be to go back and read Bill O'Neill's book, How to Make Money in Stocks, and understand exactly what you're looking for when you're buying stocks, because that's what's wrong with this one. It's just not something to be buying to begin with. WDAY. What is that one? Is that Workday? Yeah. I don't know. It's in a little flag formation. It's kind of wide and loose. I'm not really playing with this one.
And it's all red. Earnings are red for next few quarters.
Negative earnings. It's kind of like one of those, hot stories, hot goodies, as Bill O'Neill used to call them. So I'm not playing here. So I would just avoid it. HSM, pocket pivot volume. On the daily chart, I mean, that is getting pocket pivot here yesterday. So is this another bank? It is, isn't it? Why am I not? It's not coming up.
It doesn't even pull up.
Well, you know what? This is what am I looking at here? I'm so used to not looking at penny stocks that I was thinking this is a $62 stock. It's a $6 stock, so I'm not interested in that at all. And look at the pattern. That pattern is nothing what you want to be seeing. This is a cup with a handle, but there's a prior downtrend. There's not a prior uptrend, and I wouldn't call this 1 week a prior uptrend. So not anything to be messing with. Short CMG at the 50-day line. My thinking here is this thing's come down a way, so I would go after something fresher. This morning it did hit the 10-week moving average, but it's still below the 50-day. So this is one I wouldn't really mess with right now. It could roll over, but it doesn't seem like a high probability play. So I would just leave that alone. IBN, oh, isn't that Ichi or whatever it is? What is the name of this? Itchy Bank, or yeah, or something like that. CC Bank, I don't know, but you got a big gap up today. Is it a viable gap up? I don't know, but the stock, 11% earnings grower. It's not something I'd really be interested in. How about you, Dr. K?
No, not at all. I'm just Yeah, it's a bank stock, and I don't know. The upside seems pretty limited on this one.
You also got this going on. These are not the kind of patterns I'm really interested in looking at. You know, something that's been in a downtrend for a period of time. It's trying to make a turn, and it's just kind of does it really have a big move ahead of it? You can see this thing's had moves before and it doesn't really go anywhere. Trades kind of thin, trades kind of erratically, so not really something I'd be looking to buy.
And India, it's an Indian bank, and the markets in India have been pretty poor in terms of performance over the last 2 years. If
Yeah.
you look at IFN, that's the India fund, and it's pretty poor. These very speculative indices like RSX, that's the Market Vector Russia fund, and it doesn't take much to see that the U.S. is still the tallest standing midget. So I would stay focused on U.S. for now.
Mm-hmm. Someone's asking about Aftermax. Now, I kind of like the base it's building. I think it's building a decent base on the weekly chart. It's gone for a while though, so you got to keep that in mind. But the story is pretty good, and it's just building a base. So there's no real buy points in here. I don't see any pocket pivots anywhere over the recent week or two. This would be your volume here, which is less than 10 days away. I think it's 1, 2, 3, 4, 5. It's exactly 10 days away. So today you're not really going to be able to have a pocket pivot. But it's not, I don't know if I'd be messing with this right now. It just, like I said earlier, we're pretty much skeptical of the long side of the market. Sure, the market direction model went to a neutral signal, but that's just what the market direction model has done. We knew a while ago that, and we discussed many times in these webinars, that the market was in a position to bottom 2 Fridays ago, and it did. And so now you're in this oversold bounce, and we're just seeing where it goes. But you kind of want to step out of the way in the near term with all this wild news, and Dr. K talks about staying in cash. That may be the key in terms of what you want to be doing here, and rather than looking for a whole bunch of longs. Some things have worked, but as I pointed out earlier, I'm basically trading out of them pretty quickly. IBD calls HTB to Wells Fargo to India. Uh-oh, if that's the case, then look out, because that's what Wells Fargo looks like. So, so I'm not so sure about that one. Maybe was that in yesterday's paper? ParXL is trying to break out today, short little base. So I don't know. You got what's the earnings here? That's been one of the better stocks. 45% earnings growth. It is. This is. I'm going to try and shrink these. I think that's a better way to do this. Let's do this. Yeah, that makes it a little more coherent looking. I think on these E-signal charts, when they're big, they tend to look a little bit exaggerated on the vertical axis there. So that's a little better. And you can see ParXL, it's just trying to break out. So I don't know. If you want to buy it, go ahead. I just don't think I want to go long these things. Triple D, I don't like these stocks. They're very erratic, and that's the way they've been. They haven't had any big moves. I mean, look at this thing. Since here, it's tried to move higher and never really gone anywhere. I think SSYS is the competitor. That's acted a little bit better. And you had a pocket pivot, I believe, back in here somewhere right there, but you were extended from the 10 days. So that's a little bit better, but I'm not really interested in either one of these right now. PVH, someone's asking about. That's the old Phillips Van Heusen. You had a nice big move, but you can see you break out of this flag and you come right back in. So no real sustainability there. Kind of cheesy, I guess, at best. And so on that basis, I'm really not all that interested in that either. So it's a retailer. Earnings are growing at 24%. It's marginally okay, but sales are negative 1%. So what's our requirement for sales growth? 20% or better. So this really doesn't qualify, especially if it's a retailer. You want to see sales growing a lot more robustly. So Facebook, everybody asks about Facebook. I think Facebook's a big short squeeze, but there was this pocket pivot here, so I guess you could have gone after it. I'm just very skeptical of coming after Facebook this low in the pattern. You have gotten some love from the move so far, which has been about a good 20% or so from this pocket pivot here. But on the weekly chart, you still got to be coming up the right side. So it still looks sketchy to me. Um, and I know a lot of this has been a lot of talk, 0% earnings growth, talk about what the opportunity is here. I think you'll see it when it happens. And, it may turn out that it forms a new base and gets set up again, so I'd probably just hang with it. Hang out, just keep an eye on it. So I want to see some strong earnings growth. I think 0% earnings growth is really not what you want to see, as well as, especially in the face of 32% sales growth. So it doesn't seem like they're able to leverage at all the sales growth. So any comments on Facebook, Dr. K? I know that's one of your favorite areas.
My favorite stocks to pick on, really. There's just too much risk in the pattern. And it remains to be seen when they can really monetize their models. The stock price will tell us when that occurs. And in the meantime, for this pattern to redeem itself, it needs to get tighter, and it needs a little bit more time in the base, and then we need to see a constructive breakout or pocket pivot. Yeah, that'll be great if it actually does that. But I'm pretty skeptical at this point because monetization in cyberspace is a really tough game, and it's incredibly competitive. And even though Facebook does hold, the lion's share of users, their monetization methods are slow to take traction here. So it'll be really interesting to see how this plays out. Them versus Google versus some of these other juggernauts out there.
See, I got a bunch of stocks coming through. I'm going to run through these as quickly as I can. First, I'm going to let Dr. K. Someone's asking you about this one, that you've done well with Finney's in the past, and would you buy this one? Greenway Medical Technologies.
Yeah, I've done well with thin ones in 2006. Toward the end, the last few months of 2006, that was the last really excellent small cap environment that I've seen. And in those 3 months, I more than doubled my account. It was fantastic using pocket pivots, which I discovered in 2005. So it was very rewarding. But that was the last legitimate uptrend that the markets had. It went for 3 months. It was fantastic. Some could argue, well, 2009 was an uptrend, but it was really junk off the bottom uptrend, and a lot of the tried and true indicators no longer worked. So 2009, as O'Neill once said, was his most challenging year ever, although I think he would restate that to say 2012 is now his most challenging year ever.
Yeah.
So Gateway, this Greenway, G-Way, not interested. It gapped down a few weeks ago. That's all I need to see. And even if it were liquid stock, I wouldn't be interested because of that flaw. We're going to have to perhaps wait a while before we get a really good small cap environment in our midst.
Yeah, I think you're right. Somebody says it sounds like you were bearish on the market. I'm not bearish necessarily. I'm just moving with what's happening, and as I said earlier, I'm just taking things on a stock-by-stock basis. We do think that you're in an oversold bounce, and given the fact that you're 45 months into a bull market, the odds of starting a new bull phase and a big bull rally seem pretty remote. The other thing is that if you look at what happened 2 Fridays ago in the indexes, and I'll pull up like the Qs here, or is it just 3 Qs these days? How many Qs are there? As we pointed out 2 weeks ago, you undercut these lows here in July, okay, and then you turned and you rallied, and you were going parabolic to the downside, so you were in a position to rally. So to me, this makes perfect sense. And you're coming up to the 50-day moving average, running all the shorts who came in late, and I noticed that most people are emailing us and they want to short everything on the planet right about here. And so you kind of have to be early on it. And now everybody wants to get long, and I think this may be the spot to be looking to go short. So I'm not really bearish or bullish. I just think you're in an oversold bounce. You have a handful of stocks acting well, but they're not a huge breadth of leadership here. And mostly some of the big index stocks like Apple, Priceline, and so on, and Google are bouncing pretty hard. But all of that seems pretty normal to me. So I'm not necessarily bearish or bullish. I'm just looking at what side of the market I want to be on for the next leg. And this is a nice reflex bounce here, and you could have gone long a stock like Apple if you wanted to trade it. And I have tried that at various points along the way. And sometimes it works and sometimes it doesn't. So I'm going to run through a bunch of names. We got a bunch of IMs coming in. CF is trying to come up through a base. There's no real action here that shows you have a pocket pivot or anything yet, so you'd have to wait for that. Time Warner is the cables are acting pretty well. I notice Comcast also is another one. CMCSK, I believe. There's another one. You had a pocket pivot in Comcast yesterday. So some of these are acting better, and Time Warner is another one. We actually have Time Warner here in the office, but it's a little bit extended. You get some minor increase in volume over the last couple of days as it's trying to go out to new highs. But they tend to be pretty slow, and they've been basing for a while, so it might be something to keep an eye on. But again, like we said, we're not all ready to get roaringly bullish here all of a sudden. We'll just have to see how things pan out. Silica Holdings, U.S. Silica Holdings, it's a thin stock. We've looked at this many times. It has gotten some support, and these guys make the sand that's used in fracking, and supposedly that's a big growth area. But there is some environmental issues have been brought up, and I think with the current administration, there might be a lid put on fracking. So I'm not sure the stock, while the market has been rallying the last couple of weeks, stock's been getting a lid put on it. So I'm not really a buyer. You can see on the daily chart it's coming back to the 50-day moving average. I think that it might just be too low at its pattern. And I would think if the stock is, if the market's acting well, then the stock should be going higher as well. Somebody's asking if Ellie is a, Ellie Mae, I love that, if this is a short. I'm not really inclined to short it here. It looks like it's maybe trying to build a new base. It's a little bit too thin for me to short. I know it trades 705,000. That's a little bit too thin for me. Now the other one that looks a little more like a ugly pattern could be a head and shoulders. Here's the weekly. I don't know. Here's a either a late stage failed base or some kind of left shoulder ahead. Now you're building a right shoulder. That's a possibility, and it might be shortable up in here as it approaches a 50-day moving average. I might be more inclined to go after this one. But right now it's just not clear yet. But you could probably probe it and use the 50-day as your stop at the very least, maybe a little tighter using the high of the day, since it is trading down in its range today. And so, it might reverse. But it does look like it's forming a right shoulder in an overall sort of head and shoulders formation here. And this is the right side of the head. But it's subject to news, and I don't really think the housing industry is recovering. I know somebody asked about Toll Brothers, I think it is, or Ryland rather, as an ascending base, and I don't see that as an ascending base at all. It is holding in a base here, so it's holding in tight, but there's a lot of phantom inventory out there in the housing industry, and banks have been pretending that they don't have all these mortgages out there that people are no longer paying on. And so I think that a lot of that still has to come out of the woodwork or come out of the closet, so to speak. And I'm not inclined to be a big fan of the builders. You got any comments on the builders, Dr. King?
Yeah, I think there's phantom inventory. There's the price volume action is saying that these things were doing very well. They've had a pullback, and if it's really going to be a legitimate continuation of the uptrend, we will see this damage that was done in stocks like DHI correct itself and offer new buy points. But stocks like DHI, they're pretty sloppy. I'm not real excited. If you look at LL, ready for that to come up. No, it's not coming up.
LL, Lumber Liquidators.
Yeah. I think that Wanda just
pulling along.
Here, let me see if I get it on the other side. This always happens right when I'm making a point. The Wanda will just shut off. So I'm looking at it from another screen here. Yeah, and LL again, that it tends to hit the 50-day fairly often. So and it violated it a couple times too. So it's a little bit choppy, and it's had some viable gap ups. But again, I'd be careful with this group. I don't think they're going to be like running off to the races like we see in tech. I think it's going to be more of a sloppier pattern. They are commodities after all, and a lot of these commodity-based plays like oil, they tend to band widely, and therefore it's easy to get whipsawed out of these kinds of stocks.
Sorry about that. Oh, I just heard an alert go off.
Yeah, it sounds more dramatic than it really is.
Bullet. Or what are you dodging bullets? Where are you in South Central? Okay. Let's see. Piling through some of these names. Tiffany is short here. I wouldn't short the gap down like that. I think the pattern's really low. I don't know. I'm not really interested in shorting it. Ruger's extended, so I'm not a buyer there. There's the other one is Smith & Wesson, I think, SWHC. It's been trying to come up. You had a little sort of pocket pivot action here, but you're extended from the 50 days, so I'm not so sure I am. I'm not really. I don't know. These names, they've had some moves, but they tend to be erratic, and I haven't really seen any real power. Sturm Ruger has acted pretty well, and I guess everybody's buying guns for Christmas before they outlaw them. But I'm not a buyer of either one of these. How about you, Dr. K?
No, I've seen this one pop up on my screens before, but there's not enough momentum. I think the earnings and the sales are pretty. They're looking pretty good. Industry group strength's pretty good, but yeah, I'm not real excited about this stock. I guess the upshot really is that 2012 has been a very tough environment, perhaps the most challenging. I really need to see a stock that ticks all the boxes before I'm going to get interested in it in this kind of environment.
Yeah, exactly. Its core is a buy. There's no buy signal here. I've been looking for maybe a pocket pivot coming up to the 50-day, but that's what you have to wait for. Other than that, it's not a buy. Regeneron is another pocket pivot, but it's extended from the 10-day, so that's not buyable. Somebody's asking on that. Onyx Pharmaceuticals, no buy points in here. Is this sort of a little pocket pivot off the 10-day? You're well under the 50-day, so I think it still needs to round out its base a little more. You agree on that, Dr. K?
Yeah, that sounds about right.
Yeah. Netflix is not a short, and it's not a buy as far as because I just leave it alone. It's subject to news. You got Carl Icahn in there about a big position. Who knows what sort of news is going to be coming out of the woodwork on that one, so I'm not really interested in that. I would just say for everybody who's throwing names at us to buy, if we thought something was really viable, we would put out a report on it. And I think the only thing we've done recently was Commvault on the pocket pivot on Monday it was, yeah. And so, that's worked so far. And so what we like, we'll put it out there. But if you're asking us about 50 different names and would we start jumping in and buying them, I would have to say that, that's probably not the case in most of these names that you're throwing at us. The other thing is you have to ask yourself, are the earnings really that good, Someone's asking about Fossil. This thing is in this big double head and shoulders type of thing. This looks pretty weak. I suppose you could try and short it in here, and it might roll over. I know another one that was in a similar position was Herbalife, and that has rolled over. But notice how you're undercutting, and now you're trying to rally back. Still pretty erratic. But Fossil looks potentially weak here. So I might keep an eye on it if you wanted to come and short it. But the possibility still exists that it could rally up to the 200-day moving average, which is around 94. So, but right here, if you try to short it, you would have to use the high of today as a quick stop. But this could be an area of overhead resistance. It's going to depend on what the market does. So just keep in mind, anything that you come into short isn't going to work unless you see the market roll over as well. So. I just had one of my power plugs on my laptop over here fall behind the desk, and now the battery's low. It's been one of those days. It's going to run out of power now. Anyways, let's see. What else we got? And that's pretty much all the questions we have. Let's see if there's anything else that's popped up. Do you or Dr. K have any favorites at this time? Well, we've talked about Commvault. I just pointed that out. So if we like something, it's going to go up, on our pocket pivot reports, basically. Somebody's asking, is REGN ready for a short position? On what basis? You know, I think that there's a flaw in the thinking altogether, and that is that something that's moving up is a short, and that's a good way to get your head handed to you. Somebody wanted to short this thing. They thought it was 3 weeks down and 3 weeks up here, you know, into new high ground, but it's not really, because you don't get this sense of a whoosh to the downside and a whoosh back to the upside. These are tight ranges in here, and I know somebody was talking about that last week or a couple of weeks ago, shorting it on that basis, but this doesn't mean you short the stock. So, in fact, if anything, it tells you this thing is pretty damn strong. You certainly don't want to be shorting it. You can't buy it here; it's extended. Somebody else was asking about that, but no, not in the position. Remember, you're looking for weak patterns, and if you want to know what a weak pattern looks like, you can go and buy How to Make Money Selling Stock Short, which is a book that I wrote with Bill O'Neill on shorting, or you can go look at our book, Trade Like an O'Neill Disciple, and look at Chapter 6, where we also kind of do an updated coverage of the short side there. And the next book we write actually is going to be entirely devoted to the short side, so you can watch for that. That may come out in I'm going to say 2014, right, Chris? I don't see us getting all busy on a book just yet. We just
right.
finished it.
I think we need a breather. 2014 sounds like a good day. Good year.
A couple of readers and maybe 5 martinis, and we'll be ready for another book. But yeah, you know, that's a lot of work. So all this stuff, you know, books and going to Money Show and all this stuff, it just takes a lot of time away. EXP. I'm going to finish up here because we're getting in just about an hour now. Eagle Materials. The stock has trended higher, and it's had some buy points in there every once in a while. Here's a buy point, a pocket pivot here, but other than that, not much. So it's just trending higher and looks pretty decent. But like I said, we're not really all that enthusiastic on the long side here and ready to just go jump out and start buying everything on the planet. So, you know, we're very specific about what we like, and I think we've only talked about a scant few names, so I think that's really what it boils down to. And I just say don't get all excited because you see the market went up, you think you have to plow into everything on the planet on the long side. We're just kind of hanging back. You know, I'm actually putting out the SPXU and the SQQQ into this rally and testing that out. And I know the market direction model is on a neutral signal, but I'll test it out independently. Just to get a feel for it, and I might even consider hitting Apple on the short side possibly, because it's more in a position. But you're using, you know, you got to use a pretty tight stop there, maybe the high of the day, which I think is 594. But you know, not seeing, say, a stock like Apple on a relative basis, the market rallying so much. Yesterday it was down, the market was rallying. And today it's kind of flopping around. It's down, or basically, well, it's up a little bit, but it's just kind of flopping around, not really going anywhere. So to me, this isn't a weak position. You know, Google is another one that might be in a weak position as it gets closer to the 50-day. So I'm watching for that. Otherwise, you might get into a situation where you see the indexes roll over, and in that case, I might want to be coming after the SPXU or the SQQQ, the inverse S&P and the inverse NASDAQ ETF. So the situation is kind of fluid, but as Dr. K was saying, you might just be better off in cash until something clarifies itself. And of course, we brought up the possibility that, you know, government may intentionally take us over the fiscal cliff, and as a way of creating a crisis that allows them to expand their powers. And I know that sounds ominous, but you know, I don't. It wouldn't surprise me to see the government continue to just grow as it has until you reach a point where it simply collapses. But who knows when that point is. So let's see if I have any final questions here. Somebody points out in Sturm Ruger there's a huge short interest, and that could be part of it too. But you know, if you bought it anywhere in here and you're up on it, you could probably just sit with it and see what happens. You know, you're in a good position. Visa, slow stock, so not really buyers here. eBay's another one. I saw that break out the other day here, and you know, that's the whole Christmas thing. But it's coming out of this pattern, 1, 2, 3, 4, 5 week base here. You know, I don't know. Is this going to be a new leader? What's the earnings growth look like, Dr. K? It's pretty tepid, isn't it? Or is it hopping?
Well, it's, you know, eBay's
15% earnings growth. Woohoo! I'm all over that.
It's like a lot of these companies that had their day, you know, kind of like Microsoft and IBM. All these these fast names, once upon a time, were great growth leaders, and then once they had their run, that was pretty much it. Same with Google. You know,
Yeah.
they've all had their day, and then that's it. But after that, they turn into these, these slower moving, more middle-aged, type of stocks.
Middle-aged. Yeah.
Experience, lots of experience, and they're solid, and they're good for certain type of investments, but not for our style.
Yeah. And if you really have to buy it, I guess you could buy it, but you use a quick stop at the breakout point. So, but if you're asking us to tell you, yes, this is a great stock, it's going up 100% for year, that's really what we're looking for, okay? And that's what I'm looking for in any bull phase. So I'm asking myself right now, what has that potential? Maybe the Commvault does, maybe the RAX does, although it's kind of a mature name as well. And maybe this is all just a bunch of baloney and the market's going to roll over. So I take it small if you're going to come in on the long side and just keep yourself in check there in terms of when you get carried away, especially at this juncture of the rally where you're up a ways. And basically stick to that and just go for the best quality names that you see. And we've only seen a couple. So CHUY, I just got to look at this one. Another thin stock. It's not one I'm going to buy. What does this thing trade? Like 150,000 shares a day. It's got good earnings. Chewy's holding this as a restaurant. It's got good numbers. The numbers aren't too bad, but double bottom sort of base here, and so you could call this a breakout point. If you like this and you are okay buying thin stocks, I guess that is a buy point, a breakout through a double bottom. So you're using a 7, 8, I'd say 6, 7% stop on the downside, then you're probably okay if you want to do that if you really like the story. But it's acting okay, but it's a thinner stock, and that's why I would steer away from it, especially in this sort of market. Somebody asked, how much emphasis do you put on pre-tax margins? I mean, it's one factor among many, so I wouldn't say that I weight it according to some percentage weighting or emphasis that I would give it. How about you, Chris? No?
Yeah, I mean, this is, again, the stock has to check all the boxes, and this one doesn't. And it's really thin.
Vulcan Materials, I don't know, marginal breakout, another one of these, so it doesn't really have the... Yeah, this is a tough one. It doesn't really thrill me. Splunk, not touching that with a 10-foot pole and a downtrend. I don't see any buy points in here. Not only that, I don't think they're making any money. Anyways, I think that's all we've got for now. Somebody points out eBay is rallying on anticipation of spinning off the auction and PayPal. Well, that might be so, but I don't think that's a reason for me to want to buy the stock. So, but that does explain why it's been moving. Qihoo, this is another Baidu competitor, so it's in a base here. Tried to break out here, but it's stalled out and came in. So I'm skeptical of this. It's not huge earnings growth, and China has been making. What is the China? There it is. China's been the market. Is this the right one? Yeah, that market hasn't been so hot. So I'm not so sure I'm too excited about a Chinese stock like Qihoo. Interesting story though, but they're just a competitor to Baidu. I don't see the same kind of huge earnings growth that you saw with Baidu. Anyways, that's all we've got, I think, for now. So that's kind of where we're at. It's pretty much, I think, as Dr. K was telling me earlier, it's not a lot to talk about, even though we did get a lot to talk about in terms of names that people were sending us. But that's what happens when everybody gets excited on the long side. Notice there's a huge number of names people are suddenly interested on the long side, and yet I'm skeptical that we're at a point where you really want to be piling into the market. So I would be cautious here, and if you do take any positions, look at them either as short-term trades when you do have some profits to take at least some of them. Otherwise, take smaller positions. Okay, you have any overall final advice to offer in this environment right now?
Stay nimble and stay quick, because it's we're potentially going into a choppy environment because the market had sold off, and now we know what happened earlier this year after that sell-off in May and June, and the market went in a pretty choppy phase. And who's to say that couldn't happen, especially as they start jawboning on Capitol Hill regarding the fiscal cliff, and we're going to see a lot of posturing by Dems and Republicans, and that's going to create added volatility in the markets.
Yeah.
So beware.
Yeah, so that's pretty much our position. Anyways, I hope that's helpful. Maybe it isn't. Maybe it is. But just watch for our reports and see where we come out. We'll keep an eye on Apple here and some other short sale targets. But for now, we're just kind of letting them do their thing. And just watch for our reports to see what it is that we really feel strongly about, if anything. But you can see right now we don't really feel that strongly about anything, and that's okay as far as I'm concerned. So, anyways, we'll talk to you guys next week, next time, and we'll catch you again. Take care.
So long, everyone.